Silver hearing aid with a brief squeeze. If you're fortunate enough to locate a lender, the short-term leasing rates have soared by 20 to 30%, and it seems like no one in London has any silver. Silver leasing rates have now surpassed platinum's, signaling the beginning of a silver crunch. The result is that there is a worldwide squeeze. We are now in the last stages of the 45-year cup and handle trend, which has been projecting triple-digit silver prices for quite some time. I predict it will be in the mid-triple digits. Okay, so I'm reading Gottlieb for the first time. Almost no silver is circulating around freely now. A former executive at JP Morgan Bullion Bank is Robert Gottlieb. The United States will no longer get any metal from a Canadian precious metals trader. Hey, what's happening? It makes no difference. The point is moot. Actually, it's a positive thing that they are trying to influence silver. For what seems like an eternity, silver has been available to you at significantly lower costs than it actually should have been. They will now face the consequences. Please, Tim Hack, give me my beer. The borrowing cost for the SLV iShares Silver Trust is now above 12%. That came from Make Gold Great on October 8th. We still do not have any loanable silver SLV shares. The loan fee is currently 12.34% for those really short-sighted individuals. I should mention that being short causes significant pain as the price increases. The pain is being magnified and is now being used against you. Usually, they're under pressure from all sides in this situation. The typical borrowing fee is approximately 0.5% in this location. It has been going up recently, and we're now up to 2.5%, so it's probably around 1%. In addition to the losses they are currently facing, they are suddenly charged an additional 9%, 10%, 11%, and 12.34%. We need to know where they acquire the shares from, because when they sell them, they end up short. They are not theirs, so they take them out on loan and resell them. Their broker at the brokerage house lends them to them. What is the source of these for the brokerage house? If you have a margin-enabled trading account, they will not lend you shares because they do not possess a large number of them. Brokerage firms can secretly borrow your shares if they so want. This could lead you to believe that you have a stake in SLV or GLD, or even a star share in the company. In reality, though, someone has borrowed your shares and sold them on the market. Their money is due. They are expected to receive compensation. However, individuals who bet against the market are now losing money due to increased prices, and, to make matters worse, are having to pay interest on top of that. Because of this, it promises to be an intriguing occurrence. On the other hand, this pattern of consecutively higher closed candles suggests that the uptrend may be here to stay. Again, Tim Hacks. If short sellers are unable to profit from quoting interruptions and stops, then I believe the paper market is beginning to collapse. Thus, the short seller has minimized their losses when they put a stop, and the quotes stop working in the event of a gap up. Just because it paused for 15 minutes straight from Manco doesn't mean it can't carry on up. For a period of 15 minutes, Manico 64 IG.com did not quote spot silver. Apparently, quotations were no longer provided by the London bullion institutions. TF Metals say Turd Ferguson has brought it back online, and now cracks are beginning to show. Additionally known as the Craig Hemp Key. It looks like we might be on the verge of a truly historic moment. As the backwardation reaches an unprecedented $1.12, silver is up $1.40, yet the front month December 25th contract futures are up only 20 cents. For the next several days, you may want to keep this in your mind. In a futures contract, backwardation occurs when the payment for delivery is higher now than at a later date. So that's the situation right now. People are in a hurry to get their hands on silver. That was at 8:56 in the morning. Exactly a few hours later, at 11:42 on October 9th. There is a $2.50 discrepancy between silver spot cash and silver December futures, according to Bob Coleman's Silver Backwardation Alert Bulletin. So, a lot changed in that short period of time. Someone who is allowed to distribute Royal Canadian Mint products, and who is also an attorney, is doing this, according to Hans. It may be an indication that the international trade of tangible precious metals is becoming increasingly significant. Greetings. This is Mike. My message is brief. Even though we're thrilled to see so many new viewers, I feel compelled to mention that only about 15% of our audience has really subscribed and enabled notifications for our channel. Some difficult times are ahead of us. Please activate notifications so you won't miss any changes. Your thumbs up are always appreciated. Finally, anything else about goldsilver.com. For more than 20 years, we have been delivering first-rate instructional materials. We would be truly grateful if you could consider us as your precious metals dealer so that we can carry out this important work. Returning to the video, he is retweeting about the international trading of tangible precious metals. The United States will no longer receive any metal shipments from Canadian trader Mr. Yuppie. I don't understand what's happening right now. I drew this diagram. It appears slightly amusing. Stock charts do not include intraday pricing when looking back as far as January 18th, 1980. They are down to only the garments. That is the information they have. To sum up, the open is 49/45. The peak was at 49 and 45. Because the low was 49 and the close were 45, there is just one line. However, I intended to demonstrate this as the prior high back. Accordingly, these are the garments to which 1980 is referred. Now that's a high. As a result, according to Peter Spina, silver prices in London close at record highs. The highest price close ever recorded was in the 1980s in January. The previous intraday record was 49.45, while the current close of 49.68 rounded off the silver set. Prices reached a high of $52.80 on January 18th, 1980 at the Chicago Board of Trade. So I created this chart not long ago. For those who are unfamiliar with their meaning, this alludes to the Monday before last and the time spent gazing at these candles. As a hollow body candle, here is where the fat is located. The open is the thickest section at the base, and the wicks at either end represent the price activity occurring during the day as prices rise and fall. A black candle sits atop the adipose tissue, and you might not be a fan of it. The clothing is at the bottom, and this was the opening of the intraday. So it went like this: Monday through Thursday, then Friday, then Monday through Tuesday, then Wednesday and Thursday, and then something occurred. The price dropped significantly and ended the day below after an unexpected event. Yes, it is available. Having said that, the garments remained on top of those from the day before. This has therefore persisted in its upward trend from a closing basis. However, I believe this to be a shooting star. It portends disaster. You know, in theory, it shouldn't be a positive sign. It makes little difference, though, because it closed above its prior clothing, which is still an uptrend. And everyone immediately assumes manipulation, because, well, it's obviously manipulation. I believe I have proof that it was, in this instance. It seems to me that something occurred. The COMEX has raised the margin requirement for gold by 5.8% and silver by 9.3%, according to Bob Coleman of the CME. In my opinion, the following sequence of events occurred. It opened, then it may have fallen somewhat before blasting off like a rocket. The shift in margin requirements was publicized. This affects everyone who has futures in the paper market, which determines the spot price. Consequently, those who engage in commodities, exchange gambling, often find themselves with a margin obligation, often known as a margin call, due to their highly leveraged holdings. They will need to sell some of their holdings or come up with that sum of money. This, in turn, generates sales pressure. To avoid forced liquidation tomorrow, it would be best to mention it there, as many were selling non-stop before the market closed. It makes no difference. The brokerage house will sell part of their investment or give up the cash if they haven't already. This is the 45th anniversary of the Cup, and I was the pioneer in identifying each and every one of us. From 2012 to 2024, everyone's attention was fixed on this Cup. After that, I predicted a slingshot move from $25 to $49 when it broke this resistance line. Well, that prediction came true. Quite large. What I wanted to demonstrate, though, is that I did my very best. The blue line can only be moved up or down by 1 pixel using the arrows. So I did my best to get this on the overlap, which is 49, 45, 49, 32. There is no true overlap since the line terminated at the pixel below it. Whatever the case may be, it reveals a little opening that appears to be touching. On the other hand, the percent change is constant, because this is a linear chart. The space here is proportional to the change in percent from the previous inch, and as a result, the numerals at the top are compressed while the ones at the bottom are expanded. A linear chart, in contrast to a pie chart, shows the change as a constant quantity rather than a percentage. Consequently, we have this continuous amount change as the bottom expands and the top expands. Plus, the gap there is now clearly visible. By now, we have surpassed the 2011 peak by a significant margin. A few coins remain in the minuscule void. We are now in the last stages of the 45-year cup and handle trend, which has been projecting triple-digit silver prices for quite some time. In addition, I anticipate that it will be in the mid-30s. My friend James Henry Anderson says this: "At the outset of our partnership, he served as both my office manager and the general manager of goldsilver.com. According to him, this Bruce fellow is the spokesperson for the Japan Bullion Market Association. Silver seems to be my easy-hearing short squeeze. Short-term leasing rates increased by 20 to 30%, and no one in London has silver. Silver lease rates are currently far higher than platinum rates, assuming you're fortunate enough to locate a lender that will lend you silver. The result is that there is a worldwide squeeze. Once again, it's Eric Young. Robert Gottlieb has quoted over-the-counter silver, going to exchange-traded funds, ETFs, and the demand in India. According to Eric, this is the first occasion in history where there is no longer any free-floating silver. There is essentially no free-floating silver remaining, as I read in Gottlieb's book. A former executive at JP Morgan Bullion Bank is Robert Gottlieb. Among all gold traders, this one is by far the biggest. Across the street from the Federal Reserve is what looks like the JP Morgan Bullion Vault. Some people believe that a tunnel connects them to other entities. 2 levels below ground level is the same. That is done for a reason. At that point, you will encounter solid rock. But Robert is a terrific guy, and my friend Donna Samuelson is too. The refineries have been experiencing weeks of backlogs owing to excessive submissions, although lease rates remain sky high. Is there an excess of physical, or are there simply not enough 1,000-ounce bars to satisfy demand? At that moment, Robert got back to her. ETFs in India are requesting over-the-counter silver. Essentially, there is zero silver in the open market. The assets held in vaults, such as those at the London Bullion Exchange, or those that are available for delivery, make up what is known as the free float. It has vanished. He is expressing that idea. However, there is something intriguing embedded in Dana's question that I would want to highlight. Oversubmission, he says, has put the refineries in a holding pattern that will last weeks. The result is a flood of mine supplies that is unfit for the refineries' use since it is barley. However, the refineries currently serve as a bottleneck. They are at capacity for processing silver, so they will not be able to fulfill any additional demand. And that means that the upward pressure on prices will continue so long as physical demand is higher. If the rate of silver refining cannot meet the demand, then the price will have to rise. Thus, this is very excellent. There has been a backlog at the refineries for weeks, which is bad news for silver investors. That being said, it isn't that silver is plentiful. The retail market may not be able to accept a large quantity of physical Dora bars of impure silver. To manufacture coins, 10-ounce and 1-ounce bars, and everything else out of silver, you melt the 1,000-ounce bars that were poured into them. Those bars are the source. Refineries also produce bars that contain 100 ounces, so they can't possibly use all that silver. This choke point is limiting the retail industry's ability to purchase all products, a precisely timed paper dump, and a big decline in London's silver free float, according to Hans's attorney. Well, it took place on October 7th. On that particular day, silver plummeted. The September numbers are intriguing, and LBMA has just revealed them. What this means is that you still have to act like everything is fine, even after 888 tons vanish. They did what? They pressed the button for the dump paper price. Therefore, it is irrelevant. The point is moot. Actually, it's a positive thing that they are trying to influence silver. For a very long time, you have been able to purchase silver at significantly reduced prices compared to what they should have been. The mining of new metals is caused by price suppression, and now they will pay the price. We are currently enjoying the fruits of the shortages caused by a decrease in supply due to low prices. Why, though, are they becoming so unruly? Reason being, it is completely unrelated to the paper market now. The address that Tim Richardson gives as Martins is in Sydney, Australia. Since the gold rush began, Q has been rapidly increasing. The time is 11:30 minutes later. Indeed, we are witnessing the big silver and gold rush of the 21st century. Plus, this book covers all the bases when it comes to gold and silver. On Amazon, it is ranked as the best precious metals book. Plus, it's among the world's best-selling books on precious metals. This occurred on October 8th. Accordingly, Jared Dillian will be visiting Sydney's ABC Bullion Exchange on October 9th. They were both counted by me. About 19 individuals appeared to be waiting in line at the other one. On the sidewalk, people are passing by. So, it's not easy to discern who is and isn't waiting in line behind this. Counting those standing behind others in this line makes it appear like there are around 33 persons. As for this particular line, it occurred before to 1980. In addition, I've seen news broadcasts from Channel 5, the local coin shop, and I have reports from Time magazine here. The inaugural television news helicopter was eye in the sky. Images of the long queue that extended from the bullion store onto the city street. A broad walkway that extended to the intersection and around the block were also shown. So, There are currently around 33 individuals on this line, but in a few days there will be 330 people, just like there were in January 1980 across Western Europe and North America. They are so unable to dictate the cost. These are the kind of customers that would like to enter the business with the intention of leaving with physical gold and silver. It makes no difference how you attempt to manage it when you have shortages like these. Margin requirements are adjustable. You may create virtual gold and silver by flooding the market with paper contracts. It won't be able to captivate this audience. Everything I foresaw in this book has come to pass. All of this is happening in my debut novel. Thus, I would want to conclude by saying this. Because of this, canines tend to be happier. All of this wealth, investing, buying a mansion, and so on, is a major source of anxiety for us. The canine is merely content. His mental sphere looks like this. Seated beside my master, I am content. The fact that this thought bubble is monochrome is the most original part. Your presence here is greatly appreciated. Until then, take care.